Welcome, Sigma, to the 0.01%.
Okay, how you guys doing? So in this video, we're going to do a manual markup of what I look for personally, my Nasdaq trading strategy. I only trade Nas, sometimes US 30, sometimes a little bit of gold, but I only trade Nasdaq religiously. So before we get to what I show you on the ALGO spec, this is how you manually trade this strategy, all right, accordingly, and what I look for when trading this strategy, okay? So with that being said, let's go to the charts. All right, so here is my Nasdaq trading strategy, all right? Let's go over a few things. I use currency.com as the broker on TradingView because it's very close in point differentials to our current broker that we use, HeroFX. Link in the description. You get 50% upon deposit over $1,000. All right, so you just go in here, you go to your watch list, you'll type in US 100 because that's what it's listed on currency.com. It's not NAS 100 that you probably see on other brokers. Currency.com, click on that. This is what I use. Backtesting is reliable. Data feed is reliable. This is why I use it. Okay, so when you're trading sessions, it's literally highs, lows, and sweeps, right? So sweeps meaning it grabs liquidity, it takes out stop losses. You probably heard all these terminologies before, right? So let's just make this simple, right? During London session, this is how most people trade this strategy, right? So today's Thanksgiving currently. So let's go to yesterday, right? This is London session. This is the overlap. This is the beginning of New York session, right? So if I were to take this horizontal ray and I was to mark up the low of London session on your screen right now, just point to where it's at. You will see it's right here because this is the low. So let's type in text London low. Now let's just make this green, style green. Text, we're gonna put it at 20, bottom center, right? London low, right? So where is London's high? It's not here, it's not here. This is technically the overlap, so this is London's high, right? So let me actually put this here. Text, London's high, okay? Where is New York's low? New York started at 5 o'clock here, so here's the overlap, right? This is New York's low right there. So we're gonna make New York's low here. NY low, and let's change it to red. Same thing with the label. That's okay, New York low. Now, obviously it already played out. So we're gonna just label this right here. We're gonna press Control, and this is currently New York's high, right? Right, so I marked up the previous high and low of each session. The way that most traders will trade this strategy is if they're trading Nasdaq, for example, they'll see London's low, they'll see London's current high and wait for the breakout, and they'll long position here and just, they'll have a risk to reward if they're based on their stop loss. So for example, we got in on this candle. If you were to put it right beneath that candle, right, that's 33 points, and then they want a 1 to 2. Bam, that's what happens. So that would be most people's trades when trading a session breakout strategy. Breaks of highs and lows, you just catch the momentum, right? So the ideology behind it is during New York, the session, the banks open at 5 o'clock, okay? The banks open at 5 in New York. The New York Stock Exchange opens at 9:30. I'm sorry, not 5, 8 o'clock. 5 o'clock my time, 8 o'clock New York session. Banks open, 9:30 is when the stock exchange opens. Think about it like a floodgate, right? You have orders of people putting in orders and whatever from the night before. And as those orders get pushed out and the stock exchange opens, you're going to see this major surge of volatility of the candles going crazy, big spikes like we're seeing right now, right? And the floodgate just opens of all these orders. So depending on the ideology that you've heard or you practice, smart money concepts, price action, you hear liquidity sweeps, you hear all these things, right? And most of the time, to make it simple for yourself, there's only one or two things that's going to happen. It's either going to continue a current trend or it's going to reverse. So in this circumstance, you see that from London session, right? From the previous session, which is London, you're in this slight uptrend, right? You have, if you were to draw a trend line, you got a slight uptrend here. New York session starts, and this is where you get the ideology of sweeps. This right here is a previous pivot low. So people will have buy limit orders or stop orders if they think that price is going to sell during New York session. So this is what it means to have a liquidity sweep. A stop out sweep is when price will come into a previous low or a previous high and stop out orders. So let me actually erase this, right? And you can scroll in and see a little bit. You get these wicks here, right? And where are these wicks being located? Right here. So this was a previous level. Stop out the orders, and then what happens? Rejects right off, boom, comes back down. Now let me take this vertical line and let's highlight the 6:30 open, the 9:30 open Eastern, right? This is 6:30, right? This candle right here is 6:30. Now this is what also happens during the stock exchange open. You get liquidity sweeps. So you can see how this candle, if I were to actually replay, because we traded this live and caught this exact trade, you're gonna see this candle, see how it's wicked. It was a big wick from the top, came to the bottom, finally closed at the top, right? There's a lot of different ways people trade this. It has to be they'll call it a flat top where the candle closes strong, right? I look at the overall percentage of the candle itself. So, you know, this is the high of the candle, this is the low of the candle. The candle closed here, which means that there's more bullish momentum than there is bearish momentum. So we just went over liquidity sweep. So this is a previous high. This is also a previous high. And you can see from this previous high, it rejected, right? But the candle is still strong. We're still in an uptrend as it hasn't broken structure so far. And looking from previous, right? Depending on how conservative you want to be with the strategy, you might want to look for a break beneath London's low to look for sell opportunities. So the strategy that we've done and that I use is very fine-tuned, right? So let's just get rid of all of these. As I just stated, I look at that 630 high and low, and I use that to create a range. So instead of having to wait, what most traders will look for is they will look for a, what most traders will look for is breaks of the previous session highs, right? So just to look at it really quickly, from here, from this candle to London's low, that's 44 points. From that candle to London's high is 26 points, right? I believe this is a very conservative way to trade, and it's not a wrong way to trade, where you'll be looking for price to come back down. You probably play around here and you'll probably break down to this channel, boom, and break out. You wait for a break and retest, and then most people will enter here, right? and then find their risk to reward how they see fit. Or the other way is break above London's high and you get that confirmation to the upside, right? It's not a bad way to trade. If that works for you, it works for you. Now, what I do is I refine that range. So I use that 630 as the range. Some people like trading the 1 minute. I found it back testing. A lot of false breakouts. The risk to reward isn't really there. You get stopped out more than often when trying to use this strategy on the 1 minute time frame. And we're gonna go back to the 1 minute time frame and I'm gonna show you why. Right? So what I look for is, this is now my range that I'm looking at. Right? So, excuse me. Let's put the stock exchange high. Right? Stock exchange high, because I'm on a different time frame, so I don't want to confuse you guys. Let's change this line to white. Stock exchange high. Stock exchange low. Okay? This is my range now. Once this candle has closed on the 5 minute time frame, this is now my range. This is my high, this is my low. I'm looking for price to close outside of this range. That is my entry. Okay? So, one candle gone. Boom. You see it close right here. Now, there's different ways of trading the strategy. I have a strict pips and points strategy where I will trade a 50-point stop loss. So, profit level. When you're backtesting manually on the currency.com, it does it by ticks and points. So you put 1,000, that's 100 points, 100 pips. Stop level is 50 pips, so it's 500 here, so you guys understand that. So this is my trade. This is the trade that we caught. We were short of full TP that day. I think we went up to like 91 points, so we did hit TP1 and TP2. All right, so this is essentially my strategy every morning, and I've been training it live. You can actually check the lives. I was using the old version of what we have of the Renko suite, catching 100 points every day based on the breakout. So all you're doing is marking up highs and lows and refining that high and low to the candle versus the actual structure itself, right? So what also can happen if we can actually go back, right? You can see here, let's do it a day back and let's mark up the same way, right? So this is London's low. This is London's high, right? So let's just put that again, green text. London session's low, this is London session's high. Now that I'm looking at trading on Nasdaq, right? So I'm just looking at the previous session, seeing the low of the session, seeing the high of the session, right? So where do we spot levels of liquidity? Previous highs and lows, right? The minor structure in between and the higher structure, right? So we have a minor level here, 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 right? Even here. So these are all your levels of liquidity. You're already at a high. And New York session just started. So what happens? So you also have here, you get this 630. This 630 candle is where they start to identify, okay, this is taking levels of liquidity out from previous levels. So here, where is my high and low, right? This is my 630 candle. Let's make it white. Boom. We know that's the, that is the side. And now where can you possibly target? Now, I remember on this day, this is sometimes the weakness of this strategy is that because you get long candles as well, based on the actual candle itself, you can kind of see, just like in our previous example, where the momentum is shifting to. Or I have it on rewind. where the momentum is shifting to. It's over here, right? Because it was such a bullish candle, you actually could have got in here if you get more, sophisticated, you get more advanced with the strategy. You can actually catch this candle, and I've done it a lot, where you get a buy signal here and you'll catch this whole move from the bottom. But for those that are starting out, right, knowing where your previous session high and lows are will save you a lot of time. So for example, our TP1 is 25 points, TP2 is 50, TP3 is 100 points with our Nasdaq strategy. So just like earlier, you would have been getting in on this candle, and this candle got you about, like getting in here got you in about 25 points, right? So we hit TP1 on this. I remember we took this trade live, and then it reversed, and I caught this reversal and I sent it to the Discord as well. And the reason why is because, for example, there's different ways you could look at it. You could draw your fibs if you choose to, right? So you got your fib entries, and look at that from the high all the way down, and now you can look for retracements or pullbacks and stuff like that. But the obvious answer here is that this is London's low. So it acts like support or resistance. So now you got rejections, 1, 2 rejections coming up. So you can actually avoid a trade like this because there's a volatile move down, and look for the retracement. So instead of me actually taking this trade as my daily trade, I'm taking a bullish confirmation trade. We got in here, I called this trade up here and called it to London's high, and then I got my 50 point stop loss like usual, 100 point take profit, and that's what happened. So depending on the actual candle that breaks out from that 630 range, the more advanced that you get with the strategy, you can actually take the trade after it closes instead of waiting for a break, right? Because you're already sweeping 1 level, 2 levels. The momentum is going to carry you into the next hour. So you have 30 minutes, okay? That's 30 minutes between 6:30 and the next hour. 1, 2, 3, 4, 5, 6 candles before the next hour happens. So I look for how far it can go down to actually reverse. Like at what point will it reverse if we're getting a momentum sweep like this, where it's just taking out these liquidity levels, right? These stop orders and stuff like that before it hits a previous low or a previous high, and then it can possibly reverse. So you're either going to get a reversal trade, which was today, or you're going to get a continuation trade, which was in this example, which was actually yesterday. This was 2 days ago. Okay, so let's actually backtest some more. So give you guys another example, right? So let's mark up London's low. I'm not going to do all the text and stuff like that, so make this faster. London's low. Then we have London's high, which is technically over here. This was London's high. London's low, London's high. Okay. Let's highlight the 630. Boom, 630 candle. What happened to this 630 candle? Look at this. Rejection from London's high. Boom, right? All it did was sweep London's high. In this circumstance, right? This is also a great reason why you probably want to wait for a break of the high and low. For price to close underneath, because you actually got whipsawed out of here, right? And if you would have entered here on this candle and we went into our profit level was 100, stop, it's 500 points, you would have got stopped out and then went into profit. It's one of those days. It sometimes happens. But when you wait for a close, a candle to close underneath it, underneath that range, this is now your entry. And you're catching that whole move down, right? So take your time and backtest this strategy, whether you want to try to enter. You know, this doesn't happen a lot. That circumstance doesn't happen a lot. We'll do another one just for the sake of it. London's low, London's high, right? Previous levels of liquidity, boom, 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 right? Because now you're at a high and it hasn't broken. So I'm not marking up the highs here, the higher highs. I'm marking up the higher lows in this circumstance, right? So these are all levels of liquidity. This is 630, right? Boom, that's 630 low, that's 630 high. Short position, candle closed outside of it, bam. 50 points, 100 point, take profit. Take profit 1 is 25, take profit 2 is 50 points, take profit 3 is the 100. So you can easily backtest this strategy, and you can also look at our lives. This is the same strategy that I've been trading for a year, and it's changed the way that I trade. London's high, London's low, 625, look, perfect. 625 candle, liquidity sweep from London's low, boom. 630 candle, bullish. If you get more advanced and comfortable with this strategy, right, you would have taken this trade. Long position from here, boom. Ticks, profit, bam. That's your stop loss, that's your full TP. If you wait for a break of a close above the range, you actually would have entered here and still ended up full TP. Because remember, it has to be a candle close above its range. Because you can see this candle close as a doji, right? So it's not giving me an indication of a reversal. It's not giving me an indication of a continuation. So this is my high. This is my low, that 630 candle. Where did this candle close? This candle closed underneath in my range. So I'm not taking a buy signal here. I want to look for a strong confirmation of momentum. So I'm taking this signal here with my 50 point, 100 point strategy. This is my personal strategy. You may want to use the ATR as your stop loss. You may want to use the opposite of the range, right? So you might want to use this range and be like, okay, well, if I'm into here and my range is 69 points and I want a risk reward of 2, you know, this is your risk reward. You can see it right here, ratio, risk reward ratio. And then you just 1 to 2, you can still see you would have hit that 1 or 2 easily. So there's different ways of risk management. I personally trade with the 50 point stop loss, 100 point every morning. The reason why I do that is because I have a fixed lot size that I trade with, and as I progress as a trader, which is a standard lot. So the reason why I do that is because my current broker, Hero FX, is everything's true to size with raw spread. So we have a raw spread account, and you know, a standard lot is $100 per point. So if I'm trading 100 points as my final take profit, that's $10,000 per morning, $5,000 every loss. Stay consistent with a winning strategy such as this that I've been back testing for over the past year, and you know, the gains are consistent, my growth is consistent, my strategy is consistent, my discipline is consistent. So depending on how you want to approach this strategy, you can take that template and run with it, or you can figure out your own way of how you want to manage your risk accordingly based on your account size, based on what you're tolerable and stuff like that. So I hope this strategy makes sense to you guys. I hope that it works, and you know, you can back test it for yourself. This is a similar strategy that you can use across different pairs, Forex, Forex indices, crypto, all this stuff. Just look at the previous highs and lows of the session and see how price reacts when it hits those levels before the next session starts, and then start back testing from there. This is my Nasdaq 5-minute strategy. Hope you guys like it. See you guys in the next video.